a lot of this has to do with the discussions that Mike Greenacre, hi Mike, and Jamie have been doing with Digital RFQ, and obviously the sort of the Black Swan event that's COVID, and the ripping up of the rule book. I don't think anyone assumed ever when they were writing to deliver to Cushing in Oklahoma to that there would be a freeze on mobile travel. So I think things need to change, isn't it? So that's really what we're sort of chatting about, that kind of thing. So Mike, why don't you say something about you, and then we can go to Jamie, and then I can see Mike's here. You're on screen, Michael. Very snazzy top.
Michael, yeah, okay.
Just some more thing.
So there's Mike, and there's Michael. Mike Greenacre, why don't you start? So you wrote a very good piece for me this week, didn't you?
Yeah. So I think that's the third piece we've had in with you in the last couple of months, I think, and that's been really good for us. So my background is geophysics. Used to run around looking for where to drill for oil and things. Then I got into gold trading and broking in Switzerland. Spent a few years doing that. Came to the UK, ran metals at ICAP for 10 years. Left there 8-9 years ago, and started trading physical metals. So I was involved in the derivative space, and started trading physical metals. Then started looking at the fintech space with a mind looking back at what I've been doing in the derivatives side of things. Built some platforms, built some trading technology and a few other bits, and met Jamie, my partner in crime. We've got another chap who's an excellent CTO. Jamie was running the European leg of a big Swedish software business, which is now with NASDAQ. Jamie and I started working together. We built some things for for the global bullion market. We've kind of got a view on tokenization of commodities and assets, and how you kind of run up against these barriers of legacy technology, and at some point in time, you've got to push through those barriers, and people have to make a step forwards and stop using checkbooks, or stop stop all these different things that technology is allowing us to do. So that's our mindset on things. So we're getting there.
Yeah, and Jamie, you can wave now, because I don't think everyone knows who you are. And then Michael Barrell has sent me a private text message with that.
Great. I can introduce myself quickly if you like.
Okay, Mike's fine. He's got to go. Yeah, Jamie, why don't you just have a quick quick intro?
Okay, very quick intro. My background is banking. I spent 20-something years in Credit Suisse, Goldman Sachs, and Royal Bank of Scotland. I'm pretty much focused on the regulation side of things. My last, as Mike said, my last sort of proper job was running the longest-running European regulatory reporting business, and that's how Mike and I met. And we launched the transparency regime for the global bullion market before it was bought by NASDAQ. So, like Mike said, I mean, I just don't want to repeat everything, but my angle is more about, how do we get the institutions to come forward and start adopting this fantastic new technology, this fantastic mechanisms in which we can make more investment products available in a much more efficient manner. So that's how I'm my part.
I've seen Troy Norcross has joined us, and Jorg, how are you? Troy, we were having a chat a little while ago. You're now officially a contributor to Crypto AM, which is excellent, doing with Inside Blockchain. And I think that have a quick say hello.
Hello, everybody. Troy Norcross. I've been running a strategy consultancy for about 8 years. For the last 3 years, I've got a sub-brand called Blockchain Rookies. We say that we're all rookies because there are no gurus, there are no experts. We're all still learning. We focus in on blockchain as a business strategy more than a technology strategy. and blockchain education. Great to be here. Thanks.
Awesome. George, you're here as well, are you? Is your audio on? I can't hear you.
Because I put it on mute.
Well, that's a good, you're one of those guys.
I don't want to use your valuable bandwidth.
Hey, look, I mean, I think, listen, I mean, there's some very friendly, familiar faces here. And I mean, the idea is that we're just here to sort of free flow and chat. And if anyone wants to pitch in, that's the way to go. But I think that the thing that I found particularly fascinating when sort of discussing Mike's article for Crypto that came out last Tuesday, this just past Tuesday, was it? Mike? Yeah. A lot of interest in the article, and I think that it's completely apropos in terms of timing. As I said at the outset, the you know, what COVID-19 and the world shutdown has taught us is that we kind of need to reinvent rules, and it presents I think a really interesting opportunity to accelerate the various technologies at our disposal. But just because it has the word blockchain in it, as Troy will say, is it doesn't necessarily solve the problem. But, I think the thing that that interested me from the chats with Mike was that there's an awful lot of double counting in terms of reporting of commodities, and actually one thing that one could do by having a sensible audit trail is to sort of minimize that sort of overestimation of what is out there, so that actually sensible decisions can be made when faced with a crisis like this. Isn't that right, Mike? In summation?
Yeah. I think to put it's an audit trail kind of suggests that you're looking at something in retrospective vision, but if you have a live audit trail, a live audit trail of what's going on and what's in the market, and you know what's there. So for some example, you mentioned right at the start, talking about Cushing, and that's the WTI, and that going into almost what we call in commodities backwardation, but going negative pricing, because I think that's that thing when you look at commodities, the price doesn't stop at zero. You have obligations and those kind of things. And so whenever I explain to people who came to work in our business, I describe commodities, the pricing thing is like a thermometer, and you've got, you know, while it's up above zero, it's great. When it gets below zero, and it can go just as far below zero, it gets painful. But if you look at what went on at Cushing, is you've got this legacy delivery system, you know, and all these things kind of are very US centric, but you've got this legacy delivery system where unless you put the thing in a certain place, people don't believe it's there. And so because there was too much supply of oil, everybody has to deliver into Cushing. There's not enough forward sales going on the gold oil.
For people who don't know, Mike, Cushing is a town in Oklahoma, isn't it?
Yeah, there's a big tanker farm, and it looks like yeah, it's just like.
Well, that thumbs up was for Troy, because he told me that it was a town. I thought it was another thing.
I think it's Oklahoma. Anyway, the weird thing is that if Cushing was bigger and there was a lot more storage capacity there, then you could, the price of oil probably wouldn't have gone negative. It's a very simplistic thing. It's more not as a technical description of how that market functions. It's a little bit more complex, and there are a little more. They do have some live monitoring of things, but because of the way that companies report things and different people report things, it's hard to know exactly how much is in the system unless you monitor it in a live way. And so that means that if a farmer sells a kilo bag of potatoes to an exporter who sells to an importer who sells to a wholesaler, sells to the supermarket, sells to my mother, then that's 6 kilos of potatoes are traded. And that's how these things kind of all add up. And it's actually, if that was on a blockchain, you just track that thing down the audit trail of the blockchain, and you'd see this thing going through different hands, but it's just 1 kilo of potatoes. And I think that's the best description I can come up with of that issue. And it's the same, it's exactly the same issue where you see what I wrote in the article is the separation between where the normal gold pricing would be between the live spot price and the forward, the futures price. And you've basically got an interest rate contango there. And that runs from 0 to about $2.50, depending on which future they're quoting. And yet again, and if you have to deliver that, they only take it in a certain way in a certain place. And it would be, you know, the same as saying, put it into cash terms, is I've got to pay a bill in New York for $100. I've literally got to put the money in an envelope and post it to them. Until they receive that cash, they don't believe that I physically have it. And you know, there's some, you know, I just think we're right up against that time where just to monitor how things move is a lot more interesting. And secondly, is for especially in commodities and food supply chains and those kind of things, people want to know where it's come from, and more importantly, or as importantly, the cash that's touched it and financed it. And I think we've done quite a bit of work. We did some work for the LBMA. We're involved in an RFP process, which they've kind of stalled a little bit, on supply chain processes and using blockchain and AI for that.
So, I mean, in terms of, hey, Amit, how are you? Are you in? Are you online? Amit Pradhan, I can see your delicious face has popped up on my screen. How are you?
I'm well. Good morning to you from here.
How is Silicon Valley?
It's there.
Good.
It's
excellent. So I'm just sort of catching you up, Amit. We're talking about, as a sort of a consequence of what happened with sort of the lockdown of movement and travel and rule books being not fit for purpose anymore, that potentially sort of blockchain could play a role in sort of readdressing that down the track. And Mike and Jamie are from Digital RFQ, who are involved in the gold space as well. And Mike wrote a really good article, so that just catches you up. So I just saw you join. Do you would you like to say a few words, Amit, about who you are and what you do at the moment? Or I think it'd be nice.
well, thank you. Yeah, Amit Pradhan. I'm based out of San Francisco. As much as, well, up until 2 months ago, you could have assumed based means. That's changed a lot, hasn't it? You know, my background is AI, a lot of deep tech primarily, and then capital in the last 6 years or so. And then, one of the things I do, as you know, is run the Silicon Valley Blockchain Society. We started out with a focus on just pure capital. The mission is to fund the revolution. We're from very logical perspectives, and listening to the kind of use case of earlier, in many ways we see kind of the intersection of data, what you do with it, and how you manage it, as being very foundational to the kind of world that not just that we live in, but sort of what's happened now is going to drive a lot of how that, if you want to call it, the new normal looks, right? And we kind of focus right there in terms of how we look at companies coming in and investing in them, and coordinating this network of global investors looking at the space. And it's amazing. Everyone talks about, especially with investors, we often hear this, when are we going back to normal? It makes a really, really big assumption that A, that'll happen, and B, that was a good place to be. And as far as opportunities go, we just kind of look at the evolution of it. And you can take just the classification of work is one small example. As many of the traditional opportunities are not just on break, but have in many ways changed forever. Look at everything that's happened with online collaboration and management, and that's where you're going to see. Going back to your question of how Silicon Valley, in our context of unicorn hunting, that's where your next genre of unicorns are going to show up, aren't they?
And sort of going back to the sort of the topic in hand of of the digitization, tokenization of commodities, and how the lessons that we can learn from the global lockdown. Do you see an accelerated role for well, actually, it's all the technologies. It's AI, blockchain, Internet of Things to an extent. Inanimate objects need to be able to, you're tracking things and all the rest of it. Do you see that all of this will be accelerated as a consequence of this horrific situation?
I certainly, I think so, but I certainly hope so. I think there's been more opportunity for people to sit back and have those conversations in different aspects of our ecosystem. Different factors accelerated it. Obviously, when things were going bonkers with just the value of currencies, everyone wanted in, and everyone, was trying to tokenize, everything possible, right? And it was just a matter of time before Manchester United was completely tokenized, and decisions that Ed Woodward makes were being going to be made by a decentralized community of tokenized holders of the club. And once we've kind of traversed through the euphoria models, we're starting to see a lot of practical conversations around that start to show up, and it kind of helps that the infrastructure is starting to be in place as well, isn't it?
Yeah, I mean that was always. I mean, I think everyone would agree that sort of building a whole new sort of network system, whatever you want to call it, the rails. You need to have all of that in place to have any of these things. So a lot of the time, projects were sort of pulling the cart before the horse, weren't they?
Yeah, absolutely.
Anyways, we got some sort of points being made. I'm conscious of the fact that we've only probably got 10 more minutes. I thought it was an hour, but apparently it's a half an hour. But Stan, apropos of your point, Mike has talked about Cushing and depending on the right. So would you like to address Stan's question? Can you see the question? You lost your microphone. Gotta love technology.
Where's the question?
Okay, I'll read it out to you. There is storage in Cushing still and has been. It all depends who holds the rights to it and who are the end bag holders. Blockchain can't come in unless the industry shows more transparency, which I think is a truism for sure.
Exactly. That's the point I'm trying to make, probably poorly. I apologize for that.
And Mike, just before you answered, Troy has also added, transparency isn't always profitable. So for any blockchain network to succeed, there has to be value for all stakeholders. More often than not, the real challenge in creating a blockchain network is human, not technology.
I agree on both points. I think the issue was that, and it's the same at COMEX on gold, is that it allows people to squeeze the market for, and it's why should the lack of storage, available storage, be affecting the supply of oil, which is then moved out to be refined and sent onto the consumer. Whereas if it's just above ground, surely you should just be able to have that registered on the blockchain, and you know how much is above the ground. And you shouldn't be able to squeeze the price on the basis of the available storage. So if you've got oil in a tanker off the coast of Alabama, for example, it can sit there. It shouldn't have to be delivered into Cushing to be paid for. and to prove its existence, there should be a way of allowing that. And I know it would be hard to tag those kind of things, but these things run on all the bills of lading and the documentation and all those kind of things.
Well, I think that brings a very important point. You said bills of lading and documentation. I mean, clearly, if the rules and regulations are not fit for purpose anymore, then they need to be re-looked at by the legal community. Presumably, they're rubbing their hands with glee, thinking, "Goody, we get to spend lots of hours writing new things." But again, I mean, going back to the age-old sort of mantras of transparency, accountability, and all the rest of it that blockchain could provide in certain circumstances, the rules and regulations need to be adapted to fit that purpose as well. Otherwise, it won't work either, will it?
I think there's some smart contract authors who are capable of doing that, and I think it's not like a big bang solution where you suddenly switch and the whole world has to change. But I think part of that initial process can be tracking and monitoring the amount of product in the supply chain, so you've got transparency around that. If that depletes someone's ability and ability to manipulate a market and profit at somebody else's expense, then I don't know. I kind of think I don't have a problem with that. And when you look at things that we're looking at from monitoring sustainable metal production, so mining work, making sure that, and Jamie and I were looking with a large client now at things on some markets where people say, this is sustainably produced energy or sustainably produced food, whatever. How do you know that what you're getting was sustainably produced if it looks exactly the same? It's like when I go to the supermarket with my wife and you see organic avocados and non-organic avocados, and they come from the Philippines or wherever it is, and it's like, really? How do you know? Who are we paying the extra pound to? And is anybody actually getting the benefit of this? Does the farmer benefit or whatever? And we're working on a gold project in Colombia where you'll be able to track metal out of the ground, and then you'll be able to look on a site, click into an environment. If you're buying a wedding ring or a piece of jewelry, and see at the end of the line the family or the community that produced the metal that's in your ring. And that's the same way that the Colombians have done with Colombian coffee. It's probably the most marketed national brand of coffee out there. They're looking to do the same thing with gold, with Jamie and I.
Yeah. And gold, interestingly, I think does actually have almost DNA characteristics, I believe. I mean, in my small knowledge of that area, it's not just a case of melting something down and it's sort of like untraceable.
And I think examples that the documents don't work. There was a fraud on gold came into the US. $3.6 billion worth of gold fraud was found to happen between 2012 and 2015. That's tons and tons and tons of gold. It's not a small amount. Came into the US via Scotiabank. Scotiabank weren't complicit, but they got, their mechanisms were used. And, these things are going on, and they're certainly still going on. You can go back to Reagan times when a guy in Switzerland was relabeling oil that was during the Iranian issues, embargo times. There's all these kind of things, and to put documentation on the blockchain is not an issue. Jamie and I have a joint venture with a company that produces, just somebody quiet, that produces a method of birthing original documents on the blockchain. So there's lots of things that you can do, and that documentation remains original throughout the lifespan of that whatever supporting product that is. And just as a final comment, you can go and look at fraud in the base metals market, where there's been fraud of warehouse receipts. You know, tens of billions of dollars worth of stuff has gone on, and banks have lost money. Banks consistently lose money, and I think to say that the current system is great and legally solid, for me, that's not the case.
So, I mean, basically, I'm conscious of the fact that we've got just about 3 minutes left of our allotted time in this room. Is there anyone else in the room who wants to make any comments or ask a question or anything there? Can't seem to see anyone coming forward too quickly. So moving forward, sort of as a conclusion, we do think that the blockchain could play a role within the commodity market to try and get some sort of audit trail going on that will help, but it needs to be supported by, as Stan and Troy said, it needs to have all the checks and balances at the same time to make it even viable, correct?
Yeah, if you're asking me, I mean, there's already some of the senior oil trading companies are using blockchain to validate that trades are happening and trades.
Isn't that the thing that Consensus built, Comgo?
Yeah,
yeah.
And you've got VTOL and all the big trade.
Yeah.
So the big trade houses, and they're the guys who are going to drive it and drive the adoption. And once people see those kind of people doing it, and I think all these old legacy businesses, you know, and we need, you know, the changing of the guard to come through to slowly.
I mean, with projects like Congo and their adoption has been quietly. I mean, it's an enterprise blockchain, isn't it? So it's a closed loop, and that's actually been going on for quite some time, hasn't it? So I mean, it's not like it's been a eureka moment because of what's happened, but it seems to me that the legislation needs to catch up very quickly to avoid sort of these the consequences of these sort of unthought of events, such as what we're going through at the moment. I think we've probably exhausted our time, guys. Is it Max who's coming? A new host. Hello. We can hand over to you, I think.